As the crypto bear market continues, crypto holders have been anxiously watching their favorite altcoins continue to crash and are increasingly wondering which ones will live to see the next crypto bull market. Cardano is one of the few altcoins that has managed to maintain its market dominance while its competitors have collapsed. However, it's very possible ADA still hasn't found its bear market bottom. Today, I'm going to give you an update on everything Cardano has been up to, analyze ADA's recent price action, and tell you whether the crypto project's upcoming milestones will result in a massive rally. Now, whenever I cover crypto projects, I normally start with a bit of background. But if you're watching a Cardano video this deep into the crypto bear market, then I'm going to assume that you're familiar with it already. I'll also remind you that nothing in this video is financial advice. It's purely educational. Now, if you've been keeping up with the Coin Bureau, you'll know that the last time we covered Cardano was over 3 months ago, specifically early September. It's safe to say that a lot has happened since then, and here are a few of the highlights. So, in late September, Cardano completed its highly anticipated Vasil hard fork. For those unfamiliar, Vasil makes transactions faster while decreasing transaction fees. I've yet to see an official transactions per second figure, but online discussions suggest a smart contract TPS of 15, on a par with Ethereum. A few days later, Cardano celebrated its 5th anniversary. The celebratory blog post by Cardano builder IOHK highlighted the blockchain's mainnet in 2017, the Shelley hard fork in 2020, the introduction of smart contracts and NFTs in 2021, and the Vasil hard fork as the biggest milestones so far. Emergo, Cardano's commercial arm, also announced that it would be investing $200 million into Cardano's ecosystem over the next 3 years. Emergo founder Ken Kodama specified to CoinDesk that half of this money will be deployed to Cardano projects building in or focused on Africa. In early October, Cardano founder Charles Hoskinson announced on Twitter that the project would soon be entering the, quote, age of Voltaire. For reference, the Cardano Roadmap has 5 phases. The final phase is called Voltaire, and it focuses on governance. More about that later. Anyways, another thing that Charles did in early October was rebrand Ethereum Classic's Twitter account to Ergo, a proof-of-work crypto project closely affiliated with Cardano that has acted as its de facto testnet. Not surprisingly, the rebrand came as a shock to the crypto community. This was in part because not many people knew that Charles was technically the owner of Ethereum Classic's Twitter account, and in part because he refused to return the Twitter account to the Ethereum Classic community when asked. If you watched our video about Ethereum Classic, you might recall that IOHK was actively involved in the crypto project's development and had spent millions of dollars to that end. It's believed that Charles rebranded the Twitter account after the Ethereum Classic community refused to pass an IOHK proposal. Crypto is never short of a good feud, is it? Anyway, at the end of October, Emergo partnered with the University of Nicosia to offer a blockchain course about DeFi. For those who don't know, the University of Nicosia is one of the few institutions where you can get degrees in cryptocurrency, and you can also study remotely, which is great. IOHK also announced that Project Catalyst would be paused. Now, to quickly recap, Project Catalyst is where ADA holders can vote to fund up-and-coming Cardano projects. Project Catalyst has had 9 successful funding rounds so far, with over 1,200 projects funded by its community treasury. In November, Cardano hosted 2 significant events. The first was Scotfest, hosted in Edinburgh, Scotland, by IOHK, while the second was the Cardano Summit, hosted in Lausanne, Switzerland, by the Cardano Foundation. Both events took place back-to-back, and there were lots of announcements. As a fun fact, Lausanne is the same Swiss canton where the companies that print all the world's money are based. More about that in the description. I digress. Now, the first announcement was that IOHK had partnered with the University of Edinburgh to create a decentralization index for cryptocurrencies. The index includes things like hardware, software, network, consensus mechanism, node hosting services, governance, and geographic distribution of nodes. The second announcement was a privacy-focused sidechain for Cardano called Midnight that will be created by IOHK. Now, Midnight leverages zero-knowledge proofs for privacy, and what's cool is that it will have its own cryptocurrency which will be earned by staking pools on Cardano, which secure the chain. Keep an eye out for that one. The third announcement was that IOHK had invested $4.5 million into the University of Edinburgh to establish a blockchain research hub. Now, this makes sense given that the Ouroboros consensus mechanism used by Cardano was invented at the institution. The fourth announcement was that Emergo will be launching the first centralized stablecoin on Cardano early next year. Like other centralized stablecoins, USDA will be fully backed by cash and US government debt, and these reserves will be held at a regulated financial institution in the United States. It should be noted that USDA is the first of many financial products that Emergo will be introducing over the coming months as part of its Anzens initiative. Anzens is a part of Cardano's broader push to connect cryptocurrency to the traditional financial system to create what Charles calls RealFi. Now, the fifth announcement was that Coty will be launching its algorithmic stablecoin dubbed Djed in January next year. The announcement reportedly resulted in pushback from the Cardano community, who fear that Djed could result in a Terra-type death spiral for ADA during times of high volatility. If you watched our video about Coty, however, you'll know that Djed isn't exactly an algorithmic stablecoin. It's more analogous to a collateralized debt protocol like MakerDAO, combined with a borrowing and lending protocol like Aave. In short, it means that a Terra-type risk isn't possible. On that note, Coty seems to have made some changes to Djed since we covered it last year. Back then, only accredited investors, that is, high net worth individuals, would be allowed to effectively lend their ADA to the protocol and receive Djed's reserve token called Shen. After consulting with their legal team, however, the Coty team held an AMA in July and explained that anyone will be allowed to lend their ADA to the protocol to receive Shen. The caveat is that the Djed dApp will be blocked in 30 countries, including the United States. Note that there are no restrictions on Djed itself. Now, this ties into another significant Cardano announcement that was made at the end of November. And that's that stablecoin protocol Ardana and its related zero-knowledge scaling solution Orbis protocol would be shutting down. The news came as a huge surprise to the Cardano community, myself included. That's because Ardana appeared to be a high-quality Cardano project with a solid team. It was basically a copy of MakerDAO, which included a stablecoin DEX like Curve Finance. This is significant because MakerDAO and Curve Finance have consistently had the largest total value locked on Ethereum. Ardana had also received over $10 million in funding from prominent crypto VCs, for what that's worth these days. It even received funding from IOHK via the C Fund. Now, Charles explained in a follow-up video that he had even invested some of his own money into Ardana via the C Fund. And not only that, but Ardana was even part of a panel discussion about DeFi at the Cardano Summit, just days before the project went bust. The craziest part is that Ardana was apparently weeks away from launching its first decentralized stablecoin dubbed DUSD. Naturally, many in the Cardano community accused Ardana and Orbis protocol of being rug pulls, especially as Orbis had started an NFT-based ICO a few days before shutting down. However, there seems to be a lot more to this story. Beside the fact that Orbis subsequently refunded all NFT ICO participants, Ardana and Orbis protocol founder Ryan Matovu explained in Twitter Spaces that something happened at the Cardano Summit that forced Ardana to stop. He was repeatedly asked what exactly happened, but didn't give a clear answer. Now this is scary because the mainstream account of Ardana's end was that the crypto project simply ran out of money or the founder ran off. However, Ryan insisted that Ardana had enough money to launch DUSD in the first quarter of 2023. He also didn't hesitate to give specifics about the project's finances. This suggests that there might have been foul play from other entities in the Cardano community, possibly even from other stablecoin competitors. I want to say that this is speculation, but Ryan's answers to other questions in the Twitter Spaces suggest that this is more likely than not. For example, Ryan was repeatedly asked about why Ardana didn't reach out to the Cardano Foundation, the C Fund, or other crypto projects in the Cardano community when it was in trouble. Ryan was also repeatedly asked why he didn't give a heads up to the Cardano community when Ardana was ending. Ryan seemed to avoid these questions and emphasized that everything happened suddenly at the last minute. He also revealed that Ardana Labs is working with lawyers to get the situation sorted out, will be providing detailed financials, and is even working to pass on the project so that it can be completed. Now, call me crazy, but that doesn't sound like a rug pull. As for Orbis, Ryan said that he was funding the project out of his own pocket. If I understand correctly, he lost a lot of money on FTX when the exchange collapsed and was hoping that he would find investors for Orbis before his own wallet was empty. Unfortunately, he couldn't secure any additional funding. Now, I strongly recommend listening to the Twitter Spaces Ryan did to get the full story here, because it really does sound like there is much more to it than the headlines would have you believe. If you have any thoughts about the situation, then feel free to drop a comment down below. Anyhow, despite all of Cardano's amazing announcements, updates, and partnerships, ADA has fallen about 30% since September. This is not all that surprising given all the crypto and macro factors that have been crushing the markets. Even Charles was warning about these factors back in September. The silver lining is that the Vasil hard fork didn't end up being an Alonso hard fork part 2, if you catch my drift. Vasil actually improved Cardano's smart contract scalability by 10x and lowered transaction fees by 50%. I dare not imagine what ADA would look like now if the upgrade didn't have any actual impact. Now, in addition to all the crypto and macro factors, it seems that supply-side pressure has been contributing to ADA's price suppression too. Historical data suggests that ADA's supply has increased by almost 300 million since September. Assuming an average price of 30 cents per ADA, that works out to around $90 million of potential sell pressure. This honestly isn't all that much, and it's also unlikely that all this new ADA was sold. The problem is that it looks like there has been lots of ADA selling coming from elsewhere. The elephants in this particular room are the Cardano Foundation, IOHK, and Emergo. To my knowledge, none of these three entities raised any money. All their money came from their initial allocations of ADA. To be fair, they're probably staking most of this ADA, but there's no question that there is also some selling going on. Recall that Emergo will be spending $200 million on ecosystem development over the next 3 years. This looks like the tip of the spending iceberg, since Emergo also recently acquired 2 crypto projects and hired a new CEO for its Africa expansion. IOHK has also been hiring and promoting. Now, to be clear, this spending is likely to be bullish for Cardano in the long term. In the short term, however, it's probably contributing to ADA's price decline. For what it's worth, I have a feeling these entities sold most of their ADA during the bull market. It's not their first rodeo, after all. Now, on the demand side of the ADA equation, it doesn't look like there's been that much interest in Cardano, but I suppose it depends on which source you reference. Downloads of the Nami browser extension wallet used to interact with Cardano dApps is 200k, the same as in September. This is consistent with the statistics from Sexplorer, which reveal that Cardano dApps have around 50,000 monthly users, again, the same as September. Note that dApp Radar is also tracking Cardano dApps now. They weren't doing so back in September. I guess they got the memo. Your move, dap.com. Now, speaking of which, Cardano project tracker Cardano Cube seems to have added all 1,000 plus projects that are building on Cardano. Back in September, it was only showing around 70. The number of Cardano projects that have actually launched seems to be closer to 100 per a November AMA with Charles. Meanwhile, the total value locked on Cardano's DeFi protocols has fallen by over 30%, according to DeFi Llama. This is consistent with the more than 30% decline in ADA's price, and again consistent with the TVL statistics shown by the Sexplorer, which is probably the best Cardano Explorer I've come across. The total wallet count is where things get wonky though. Cardano.fans suggests that the number of Cardano wallets has increased by around 300,000 to 3.8 million since September, yet AdaStat shows that the number of Cardano wallets that hold ADA has declined from 3.5 million to less than 2.4 million. Cardano.fans' statistics don't seem to add up, given that Cardano had reportedly surpassed 3.5 million wallets way back in May. By contrast, AdaStat statistics seem to line up with the ADA distribution statistics on Sexplorer, which show that there are only around 2.5 million wallets actually holding ADA. Obviously, this is not a good sign, but I reckon you'd see similar statistics on most cryptocurrency blockchains in the depths of a bear market. The fact that the number of monthly dApp users on Cardano has held steady suggests that those inactive Cardano wallets weren't adding much value anyways. Although ADA is likely to continue declining until we hit the true bear market bottom, its long-term performance ultimately depends on Cardano's upcoming milestones. Note that you can find out when the crypto bear market bottom could be using the link in the description. Now, as I mentioned earlier, Cardano has an official roadmap consisting of 5 stages. We're currently in the 4th stage called Basho, which focuses on scaling, that is, going fast. One of the few remaining milestones in Basho is a scaling solution called Hydra, which will start being rolled out next year. Additional milestones include the introduction of various sidechains, such as the aforementioned Midnight, as well as an EVM sidechain that IOHK is working on. Oddly enough, Charles explained in a video about the Basho roadmap that Basho will only be complete once Voltaire is complete. This is because it will be up to the ADA community to vote on which scaling solutions are added to Cardano and what the specifics of these scaling solutions will be. While Voltaire has come into focus in recent weeks, it has already been in development via Project Catalyst, which launched in late 2020. The focus of Voltaire will be the creation of a so-called merit and members-based organization, which will oversee Cardano's ecosystem. The details are beyond the scope of this video, but the organization will do things like change blockchain parameters and manage the Cardano community treasury. Of course, ADA holders will be able to vote on the members of this organization, as well as which improvements they want to see made to Cardano and how the assets in the treasury should be spent. Charles expects to see full-fledged on-chain governance on Cardano by the end of next year. This is the same timeline given by Emergo for the launch of other features related to the Anzen's RealFi initiative. This includes introducing stablecoins for other fiat currencies, tokenized representations of real-world assets, and eventually borrowing and lending between crypto and traditional finance. In October, IOHK discussed adjusting Cardano's K parameter. The TLDR is that increasing Cardano's K parameter will make Cardano more decentralized, as it will incentivize stake pool operators to spin up new pools. ADA holders will likely vote on adjusting the K parameter in the coming months. Voting on adjusting the K parameter will probably be done using IOHK's upcoming Lace wallet, which is designed with Voltaire in mind. The Lace wallet will even include a dApp store with dApp ratings and security certifications. I couldn't find specific timelines for when Lace will be fully rolled out. In his presentation about Djed, Coty CEO Shahaf Bar Geffen revealed that the project has partnered with almost every major DeFi protocol on Cardano to introduce liquidity mining rewards when Djed is released in January next year. In a subsequent fireside chat with Charles, Shahaf revealed that it will eventually be possible to mint Djed using major cryptocurrencies on other blockchains, including BTC and ETH. Charles said that the endgame of Djed is to become a model for a potential central bank digital currency, or CBDC. Charles also revealed that Coty was the C Fund's first investment, and how he has a soft spot for Coty from working on BitShares back in the day. Now this is spooky when you consider what Shahaf said when he was showing off all the DeFi protocols that Coty had partnered with for Djed's liquidity mining. Quote, "If you are developing on the Cardano ecosystem and you are not on this image, you should ask yourself why you are not following us. Try as I might, I could not spot Ardana or Orbis protocol on the list of 40 plus Cardano projects that Coty had partnered with." So, this brings me to the concerns I have about Cardano, and my first concern is potential conflicts within Cardano's ecosystem. Some of you may remember that Cardano projects were seemingly hesitant to work together after Cardano released its smart contract functionality last September. This is because building on Cardano is extremely difficult, or so I've heard. As such, many Cardano projects initially refused to open source their solutions to Cardano's so-called concurrency issues, fearing that competing Cardano projects would copy their code and launch their own DeFi protocols first. Now, I may be completely wrong, but the situation with Ardana and Orbis protocol suggests to me that there continues to be conflict between competing Cardano projects. I'll reiterate that this is not the first time that there's been a conflict, and I recently read that there were some other ongoing disputes. Make no mistake then, if the conflicts in Cardano's ecosystem continue, they will hold the entire project back from its full potential. From where I'm standing, it looks like most of these conflicts come from the fact that every Cardano project is trying to appease Charles, IOHK, Emergo, or the Cardano Foundation. So this ties into my second concern, and that's ecosystem development. Ardana seems to have been one of the only Cardano projects that received funding from outside of Cardano's ecosystem. Regardless of whether it was a rug pull or not, its collapse has likely turned investors off of Cardano's ecosystem. This wouldn't be a problem if Cardano's ecosystem had strong connections to the ecosystems of other smart contract cryptocurrencies, but it doesn't. Cardano has arguably been a lone wolf in the crypto industry. This was advantageous in its early days, but it's arguably becoming an issue as it evolves. Case in point, consider that Cardano could have had a centralized stablecoin months ago. Now, I'm sure that at least one of the major stablecoin issuers were interested in supporting the Cardano blockchain. This could have allowed Cardano's ecosystem to grow much larger and increase its adoption by extension. That said, of course, letting centralized stablecoins take over can become a recipe for, well, centralization. This is clear in the case of Ethereum, whose creator Vitalik Buterin admitted that stablecoin issuers will have the power to decide the direction of future forks. This is probably something Cardano is trying to avoid. However, this doesn't change the fact that almost every Cardano project has received most of its funding from Project Catalyst, Emergo, or the Cardano Foundation. This relates to my third concern, and that's regulations. Now, I'll preface this by saying that this is speculation, but it is based on evidence. For starters, SEC Chairman Gary Gensler said that proof-of-stake cryptocurrencies could be securities. Newsflash, Cardano is a proof-of-stake cryptocurrency. Shortly afterwards, Cardano's focus shifted from scaling to governance, which could easily be explained by the completion of the Vasil hard fork. But Charles said this in an AMA earlier this week, quote, "I heard rumours that the Ripple case will be settled on December 15th, and that could have catastrophic implications for the industry one way or the other. But, you just keep moving forward. Regardless of what happens, it's a decentralized ecosystem that you guys control. The United States of America doesn't get to say that Cardano lives or dies. You do, the world. That's the point of a decentralized ecosystem. Now, call me crazy, but it sounds like Charles is concerned that Cardano will be targeted if Ripple loses its case against the SEC. Depending on when you watch this video, it's possible the outcome has been announced already. You'll know whether it's good or bad for ADA, depending on its price action. In sum then, Cardano has a few issues to sort out, but hey, every single crypto project does. Conflicts between crypto projects are part and parcel of a bear market, and Cardano has never rushed its ecosystem growth. Cardano is also decentralized by almost every metric, so it should be safe from the SEC. Even so, these concerns are important because the last thing you want is to be caught off guard. If Cardano survives all the crypto and macro factors over the coming months, then I will consider adding ADA back to my crypto portfolio. You can find out what it looks like now using the link in the description.